In this video, I will be talking about mergers and acquisitions. If you are working in finance or accounts field, you must have heard this term before, and the chances are that you know a thing or two about it as well. Mergers and acquisitions are generally used interchangeably, but they have slightly different meanings, and in this video we will look at it in detail. But before we get to that, please subscribe to my channel as it will make this video reach a greater audience and will also help the channel grow, so thank you for doing that. Mergers and acquisitions is a general term that describes the consolidation of companies or assets through various types of financial transactions. In acquisition, one company purchases another company. This is very similar to buying things. For example, when you buy a car from a company, you become the owner of that car. Acquisitions also work in a similar manner. So let's assume there is a company ABC which wants to acquire another company XYZ. ABC will now calculate the value of XYZ and pay the owners of XYZ, and in return ABC will become the new owner of XYZ, just like you become the owner of a car after you purchase it from the company. After the acquisition, whether XYZ remains a separate company or not, that fully depends on ABC. It can choose to operate as one company only, and in that case it will combine the businesses of ABC and XYZ, and as a result XYZ will no longer exist. Alternatively, ABC can choose to keep XYZ as a separate company. This is often the case when the acquiring company, that is XYZ in our case, has some brand value. For example, if ABC acquires say Samsung, then Samsung already has a brand value, right? It has a customer base as well. So ABC will want to keep using the brand, and so it might want to keep Samsung operating as a separate company. There is another type of acquisitions which is called asset acquisition. In an acquisition of assets, one company directly acquires the assets of another company. This type of acquisition is typically during bankruptcy proceedings, where other companies bid for various assets of the bankrupt company, which is liquidated upon the final transfer of assets to the acquiring firm. A merger is a combination of two companies which combine to form a new company. If we take our previous example, if ABC and XYZ want to do a merger, they both will lose their own existence, and as a result a new company will be formed. It can be named ABC XYZ or PQR or anything else. The point to note here is that ABC and XYZ will no longer exist, and as a result of their merger a new company will be formed, which is normally called the merged company. Merger and acquisition transactions have normally different types. Like when you acquire or merge with a company, it can either be in your same business or in a different business. So there are three types. Horizontal transactions. Horizontal merger acquisition transaction is between two companies that have similar businesses, like one company manufactures mobiles and the other company manufactures mobiles as well. When they acquire or merge together, then this type of transaction is called horizontal merger and acquisition transaction. Second is vertical transactions. Vertical acquisition and merger transaction is between companies which are in different businesses but they are in same supply chain. Let's say that one company is manufacturing shoes. Now to make shoes you need leather, and there is another company which is manufacturing leather. So if there is a merger and acquisition transaction between these two companies, then it will be a vertical merger and acquisition transaction, because they both are in different businesses but they are in the same supply chain. Like one company is producing the finished product, the other is producing the raw material. And the third type of merger and acquisition transaction is called conglomerate. It is basically between two companies whose businesses are not related in any manner. This type of transactions normally occur for diversification purposes, like one company is making milk, there's another company which is making clothes. One company acquires another and now they have businesses in milk sector and garment sector as well. There are several reasons why companies do merger and acquisition transactions, and there are numerous benefits for it. But the most important benefit is unlocking synergies. Combined company is always worth more than two individual companies. and this normally happens by achieving higher revenues, increased market share, or reducing costs. Other benefits are higher growth, stronger market power, diversification of businesses, economies of scale, and there are many more. Another important aspect in a merger and acquisition transaction is the valuation. Like when you are going to acquire a company or merge into another company, you need to know how much that company and your company is worth so you can make an educated offer. So in an M&A transaction, the valuation process is conducted by the acquirer as well as the target, because they both want to know the value of the company they are buying or selling. The acquirer will want to purchase the target at the lowest price, while the target will want the highest price. So valuation is a very important part of mergers and acquisitions, as it guides the buyer and seller to reach the final transaction price. There are three main valuation methods that are normally used for valuation of the target company: discounted cash flow method, comparable company analysis, and comparable transaction analysis. In discounted cash flow method, the target's value is calculated based on its future cash flows. Like you take its financials and make projected financial statement for the next maybe 5 or 10 years by using a certain set of assumptions. When you prepare the projections, you discount it to find its present value, and that value defines the target's valuation. Comparable company analysis. Relative valuation metrics for public companies are used to determine the value of the target. For example, if the company you are going to acquire is operating in textile sector, then you will obtain publicly available data of other textile companies and calculate certain ratios. The most commonly used ratios are PE, enterprise value to sales ratio, and book value ratio. Comparable transaction analysis. In this valuation method, valuation metrics for past comparable transactions in the industry are used to determine the value of the target, which basically means that you look for any similar transactions that have happened in the past and you use them as reference to arrive at the valuation of your target company. So that's it. If you liked this video, please hit the like button and share it in your circle, and please subscribe to my channel, help it grow.